Duolingo is up about 10% on the week, and ever since the Japanese carry trade crash, the stock is up now almost 55 or slightly over 55%. Now, these are crazy numbers, of course, and if we look at Monday, we can see something quite similar. Over the past week, the stock is up about 7%, and ever since the drop of the Japanese carry trade, we can see the stock up slightly over 35%. Now, if we look at these two stocks side by side, we can see some similarities in how they trade. And in my opinion, the way that these two stocks trade is down to somewhat of a macro level event that is happening. So we will take a look at what's going on there. Now, we also saw the new CEO of Starbucks release a letter to shareholders with his first thoughts about his path forward. So it will be interesting to have a look at it and discuss what I think about the stock going forward, as I may be making a move regarding it. And then finally, although I know it's not the most exciting stock and my smallest holding at this point, but we saw Adobe release earnings. And I mean, let's just say that something was slightly off. So let's take a quick look at why the stock is down 10% after presenting their numbers. But first of all, I want to thank the new subscribers that I have been seeing on my channel. Over the past 2-3 weeks, there have been a real boost in new subscriber, and I find that really exciting, and I'm very thankful for it. I really enjoy the comments I see under the video, and I try to respond to as many as I can, as quick as I can. Now, I am also getting closer to my Ulta analysis, and as I'm starting to get less negative about the company, I'm getting closer to making a video about it. But I want to make a real deep dive analysis on this stock with the current problems, as this stock is down about 35% since its most recent high. I want to explain what needs to happen for them, where their strengths lie, and how this investment could either succeed or fail. I just need a little more time, but it will be coming, and I'm still aiming for the end of next week, but I'm getting close. So if you want to learn more about Ulta or just enjoy or find my channel educational, make sure to subscribe to my channel because, well, more will be coming. Now, as I mentioned at the beginning of this video, Duolingo and Monday are up quite a bit on the week. Now, Friday trading still has to start, so we will see how that plays out today. But if we look, there is no significant news for Duolingo because we can see that here. And if we go to Monday, this does not really change. We can see right here as well. There is maybe some Zach's article, but that's basically following the trend. Those are not real articles, in my opinion. So the question that remains, and we need to ask, what is happening? Because why is Duolingo up this much and Monday as well over such a short time frame? And well, in my opinion, it has mostly to do with the macro environment, but also slightly a bit stock specific. Because if we look at Duolingo, for example, and we just go through a basic analysis of the stock, we can see that the next 12 months, so the forward PE, is at 50. Now we have a 50 forward PE for a stock that is trading like this. The EPS estimate for the next 12 months, or the next full year, fiscal year out, that is looking like this. That is growing from, well, April 24, $3.38 to now $4.38. Almost a 30% increase in such a short time frame. Duolingo is growing like crazy, and they only, I'm saying only, has a 50 forward PE. That is not that high for this type of stock, or a stock that is growing this fast. Now, if we just go back to this view of the stock, we can see that the EPS change for fiscal year 2024 is expected at 87%. That is incredible, and I mean incredible EPS growth. For next year, they are expecting 28%. I mean, that will be a major slowdown, but the year after also still 26%. Now, I do think they will be able to grow EPS quicker, but this may have something to do with the implication of AI. That's my best guess. Otherwise, I wouldn't know why it would slow down this drastically, as they say that they expect daily active users or monthly active users to keep climbing in the 50% year-over-year changes, well, for quite some time to come. They are expecting massive growth for the business in the upcoming quarter still. This is what they said themselves. Now, the other stock I was talking about is Monday. And Monday is trading at a slightly higher forward PE, next 12-month PE, because this is at 90. So, I mean, that is quite a bit higher, right? And if we look at the growth, then it's not necessarily expected to be bigger than for Duolingo, because this year we see EPS change of 54%. Next year we are expecting 18%, and the year thereafter 20 or 35%. Now 17% EPS growth for fiscal 2025. That makes no sense. I simply do not see a situation in which that will happen. The only way that will happen is if we will see a recession. Then that 18% might be correct. Because otherwise, this stock is just doing too good, or this company is doing too good. The business of Monday.com is doing incredibly well. Over the last quarter, they announced a new biggest customer, which has now 80,000 seats. I mean, that's just crazy. They are cross-selling a lot. They get a lot of growth from it. The newest platforms are growing even faster than the original Monday or project management platform. So that is really exciting, especially Monday CRM. Like I said, I do not see a situation in which Monday will grow EPS at 18% over the coming year. So then what is actually happening? Because that is then the remaining question. And what I think is happening is that we are inching towards that interest rate cut. We know it will be happening in September next week, and we are highly expecting it to be 25 basis points. Now it may still be 50. There is a slight minimal chance. However, we should assume 25 basis points. But what that 25 basis point interest rate cut means is that they have started. And this is especially beneficial for Monday because they do business software, right? They do software, they sell to businesses. And that means that with the lower interest rates, that businesses, their customers, will be more incentivized to spend money, to invest. And that is where Monday will see growth coming from. Now, we saw this at the beginning of the year as well, the end of last year, the beginning of this year. So we had the October-November crash, right? We all know that about a year ago, everything just suddenly started to plummet. All right, Monday sold off to about 130, slightly lower, $125, and then it recovered. So it just recovered into November, and that is where we saw a real rally happening. Now, from November and the beginning of December, we see here a close or open around the $180 mark. And if we zoom out or we go on until February, we see it at the 230 level. Now, this was the time frame in which we expected 5, 6, 7 rate cuts to come this year in 2024, which didn't really come, but that's another story. So Monday truly skyrocketed. They exploded in that time frame because of that expectation. Now, right now we are expecting rate cuts to come again. So, of course, now again, Monday is really going up. And they are just doing absolutely fantastic. But then I want to take a second with you to look at the shareholder letter that Brian Niccol, the new CEO of Starbucks, sent out to shareholders. And what I noticed when I was reading this is that Brian Niccol has either been spending a lot of time with Howard Schultz, or he just understands this brand really, really well. Because if we go through it and you listen to I think it was the Acquired podcast about Starbucks with Howard Schultz, you see him basically repeating what Schultz says about the strengths of Starbucks, but then slightly tinted and twisted in his own words. So, like I said, either he understands this business really well naturally, or he has been having lots of talks with Howard Schultz about what they see for the company. Now, if there is one person that has the track record needed in order to turn Starbucks around, it will be Brian Niccol. And what we can see in the end is that his focus for the first 100 days is to spend time in the stores and at the support centers, meeting with key partners and suppliers, and working with the team to drive these critical first steps. Together, they will get back to what makes Starbucks Starbucks. And that is, I think, really important. And what has happened is that we saw another push in share price and the stock now being almost over $100. And we can see that right here because here we had the initial bump of, well, Starbucks announcing Brian Niccol as their new CEO when the stock went 25% up. Now, for me, I bought the stock exactly on this day, Monday, August 12th. And that's a bit important of what I want to explain next. When we saw the letter being released, we saw Starbucks jumping another 5%. And now, well, now it's almost at $100. And the reason I'm telling you this is because I had an initial thought or my initial expectation that they should be able to get Starbucks back to 100 to 110, maybe $120 over the coming 1 or 2 years with the activist investors, that they will be able to pull out value for shareholders. Now, if we look at Starbucks right now, it's the second lowest one on my portfolio, the second smallest holding. It's about a 4.5% weighting right now. And well, as you can see, I'm up about 22.8%. I've received some dividends, so that's as nice as well. But I'm up almost 23% on this name in a month. And this is what I expected for the year, maybe even 2 years, maybe slightly more. And I mean, to me, this just means that they have pulled a lot of growth forward, a growth in share price. And I don't know how much fit I want to keep. I'm thinking about taking some off the table, but then I would need to have a good investment opportunity, a good place to put that money. Because as we can see, I have a cash balance right here of about 4.5%, which is, well, quite a bit on the low side, especially as I said that I wanted to build a bit of a cash position because of some macro challenges I'm seeing. One being the election. And I've been deploying some over the past week. I bought some Celsius, I bought some Lululemon, exactly what I said I would look to do. But I'm thinking about taking some off the table with Starbucks, just because it has rallied that much in such a short period of time. And maybe when I see better other opportunities, then I might go for those stocks. One of them, for example, may be Elf. I'm not quite sure yet. Now, then we just need to take a look at Adobe for a sec. Now, I know this is not the most exciting stock, and that's exactly its role in my portfolio. However, the stock is down about 10% after hours. It's down 9 right now. And I mean, something happened, right? So let's take a look at the earnings, what was expected, because we can see all of it. And what was the issue with it? Because somehow this stock beat its numbers, but it's down 9%. And it's really easy to explain, but it's best with visuals. So let's take a look at what happened, because we can start at the top line with the revenues, which came in at 5.4 billion. With the average analyst estimate of 5.373 billion, the revenue was a beat. So that's a good start. So then we have gross profit, and if we look at this line right here, we were expecting 4.818 billion. We got 4.849 billion. Another beat. Really good. We have EBITDA, which beat. We have EBIT, that beat. And now we have net income. Now, net income was 2.08 billion, and we were expecting 2.028 billion. So a beat, and I think highlighting the net income beat is slightly more important than highlighting the EBITDA beat, because, well, net income is quite a bit more. Now, then we had EPS on an adjusted basis of $4.65, while analysts expected $4.54. We had GAAP EPS of $3.76 and the average estimate of $3.50. So this is all very good. We see very good metrics coming from Adobe over the past quarter. And basically just a beat across the board. So then the issue must lie in the guidance. And that's exactly where we find it. Now, I don't think the issue is too big, and I think Adobe will simply recover over the coming quarter. But that is where we find the issue. Now, if we go all the way back to the top, we can see what analysts are expecting for Q4 2024, fiscal Q4. And they expect 5.601 billion. Now, what did Adobe give us? 5.5 to 5.55 billion. So a 50 to $100 million miss on guidance. I'd say that's not unsubstantial. Then, if we continue to the EPS, because of course that's the next thing they guided for, we can see that analysts expect an adjusted EPS number of $4.66. Well, the midpoint came in at $4.65. So that is below the expected number again. And for the GAAP EPS, we can see an estimate of $3.64, and Adobe gave us $3.60 at the midpoint. So basically, the guidance came in light both on revenue and earnings per share. All in all, I wouldn't say that's the best for their guidance. However, I do think Adobe is doing great as a business, and maybe they guided a bit light for the coming quarter, but I think the stock will recover. Now, especially when we come to think about where I bought Adobe, that was right in this dip right here. Because then people thought that Adobe would be done, OpenAI would steal the show on AI, and ever since Adobe has proven them wrong. So I can sit this one out. I can take the bit of the pain of this earnings report. I've taken some profits already in Adobe, I think last month or 2 months ago. And well, like I said, I think the stock will simply recover. Now that was it for today. It's not the longest video I've made, but the markets are a bit light on news. So it was difficult to find things to talk about. Now, I will be working on that Ulta review because that was requested. And if you have any questions or any stocks that you want to see analyzed or reviewed, just let me know and I will take a look at them. Now, thank you for watching and I hope to see you in my next video.